Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to analyze the markets and talk about what's going on. First of all, the US dollar index is still on an upwards trend. We do have a short-term downtrend in the meantime, however, we do have a longer-term upwards trend in the dollar index. I anticipate that 20-day moving average to hold. We're probably going to run into it for a little bit and touch it before heading a little higher. Again, this is just typical market behavior, and I do anticipate the dollar index to continue its upwards trend after reaching that 20-day moving average and perhaps going a little higher. Right now, the Dow Jones Industrial Average is running into a double topping pattern. Again, different market experts anticipate markets to head a little higher. I'm not exactly certain, considering all this negative economic information coming all over the world. Chinese growth hasn't been as great or as stellar as people would like, and it's not just Chinese growth that has slowed down. We got European growth issues, austerity issues, and here in the USA, we also have our own pair of austerity issues, albeit not as bad as Europe. Internationally and on a global scale, each economic bloc has its own set of problems, whether it be the European bloc, the Oriental bloc, or the United States Central bloc. So again, this is just the way the economic situation is playing out. Preferably, if I were to put my capital into smaller businesses, it would have to be either in the United States or in Central or South America, and a little bit of allocation into European companies and a very small bit of allocation into Chinese companies or Asian companies in general. So again, that's just my total outlook right now. It depends on the amount of risk to yield you want. For right now, I am primarily exposed to U.S. companies that are international, and then on the side I do have my short-term trading positions. But let's just go back and talk about what's going on right now. We're running into double topping pattern right here. I'd have to give it a day. We'd have to look at it tomorrow's session, see if it decides to rebound from it or pull back. I wouldn't be surprised if we had a rising star pattern to that trend line right here, and we can determine whether or not we anticipate a pullback or we anticipate further upside in the markets. Again, we're just going to have to watch this very closely. We're not sure how long this Santa Claus rally will last. This could be considered an upwards trend for right now because we got 1, 2, and 3 right here. The only problem is that this is this high, and we're not really getting any higher highs, but what we are getting are higher lows. So again, it's kind of it's not really an upwards. Well, it kind of is, but it kind of isn't. So again, we're just going to watch this very closely right here. If it does break out at this point, we can anticipate further upside because it would be a break above the channel. But all we have right now are higher lows, but we don't have higher highs, at least over the short term between October and December, which is a 3-month period. And 3-month periods you cannot supersede 3-month periods with multi-year patterns, such as this trend line right here. Again, the technicals are really kind of mixed up right now, because we do have a short-term uptrend, or not really much of an uptrend, half uptrend. We broke our long-term uptrend at this point in the trend line right here, and right now we're above all of the previous moving averages, so we may be good to go for another short-term rally. But again, this market may decide to lose a lot of the momentum it's had in the past couple months, based on all sorts of issues that may crop back up in 2012. So be a little careful. It's not a bad idea to be a little bullish right now. But again, I think that there's a lot of sector rotation going on. A lot of people are trying to allocate money from the cyclical assets into the non-cyclicals right now, and we're going to have to watch the earnings season to see how well companies have performed. So again, we're getting an earnings-fueled rally, we're getting a Santa Claus rally, all in one. We're anticipating what Q4 2011 earnings have been, and remember, everybody likes to buy into the hype and then they sell the news. So just give it some time. Once earnings season is over, we're going to float back down a little bit, but again, we can be excited about markets for a little bit because of holiday season, earnings fueled rally, and because the negative news has abated at least over the short term. So again, I'd have to say markets are going to head a little higher for the stock indexes, and I am a little optimistic for now. Okay, now let's move on to the next chart, which is the Euro-US dollar. The Euro-US dollar is trading a little bit flat. I will admit it's flat right here. And again, it's setting itself up for a bear flag pattern, so we're just going to give it some time to play out. Eventually, it breaks below that line right there, and I really wouldn't be too surprised. I mean, just give it some time. Bear flag patterns usually take a while to play out, but eventually we continue to trend upwards for a little bit, and then we break below that trend line and continue to head lower. So again, I believe the Euro-US dollar is still in a long-term downtrend, and the main reason why we're in a long-term downtrend is because of how rating agencies are continuing to downgrade European bonds, and how the U.S. bond market is performing relatively well in proportion to the risk premium everybody is willing to take on. And since there's the slight possibility or the potential or the large potential possibility of losing money inside of European bonds, a lot of people are taking their euros and converting them into the US dollar, and they're buying up US dollar backed treasuries. So the whole idea here right now is this risk off carry trade mentality where people take their euros and they're trying to diversify those euros into different assets like the Japanese treasury bond as well, which happens to coincide with another bear flag pattern, which you can see right here. Small float upwards, but it's not convincing me of much. I honestly think a lot of European banks will continue to diversify out of the Eurozone and continue to buy up treasury bonds, and specifically Japanese US treasury bond securities, because of the yield, treasury bond appreciation, and currency appreciation from the euro standpoint. So it really is a no-brainer for people from European financial institutions to continue diversifying out of their euros, because it's not just a matter of whether or not they're going to lose money on the treasury bond securities, but it's also there's a concern that the euro itself may become worthless, like the actual currency itself may become worthless if they adopt a different standard. And if that is the case, it becomes really complicated, the jargon gets really all over the place, and it becomes very unpredictable, because reorganizing an economy on the scale of the European Union is it would be devastating for the world economy, and therefore I think that case scenario is the least likely of all to happen. But if it were to happen, it would have a really negative impact, because the banks that lent money out in euros would then have to convert their currency standard into something else that the government decides to issue out. So then they had to determine what the euros were worth previously, if that's what the euros are honestly going to be worth in the future sense. And that's where it gets really complicated, the conversion rates from their old euro currency into a new standard. And that's if people even believe that if the euro will have value. And the banks themselves, after lending out money, what would they be paid back with? I mean, if I was JP Morgan and Chase Bank, and let's assume that the USA decided to say, hey, we're not going to use the US dollar anymore. We are going to use the US paper. Okay, so we are US something something. I can't really come up with the name of a currency. How about the US yen or something? Okay, now let's assume JP Morgan Chase has lent out all this money in the form of US dollars. What would they be paid back with, right? Because when you have a complex financial systems, you also have to consider how you'd be repaid. And for all these banking institutions that have lent money with the euro, if these European governments were to suddenly decide to change their currency standard, what the banks would have to be paid back with would be different. The currency conversion rates would also have to be altered. And another thing that has to be considered is, will the banks make money or would they lose money after considering the currency conversion, the negative deflationary effects, and will the citizens be willing to pay back those previous obligations that were stated in euros with these new currency, I guess, changes? I mean, and will it be fair to the European populace? So again, it gets really complicated there, and I don't think the European Union wants to go down that road, because that is a very ugly, and it's not the beaten path you want to go. So again, I don't think that's going to happen. What I think is going to happen is that the European governments will just have to shape up, stop spending a ridiculous amount of money, and start getting their finances in order. Otherwise, they either risk the chance of default 10 years down the road, which will happen inevitably if they don't manage their finances properly. Now let's examine the silver market. The silver market is in a long-term downtrend, and right here we're seeing this bear flag pattern before. It was a really small weak one, but it kind of happened. Right there we got a bear flag pattern. It floated upwards a little bit, and then it continues to break below that trend line right there. So again, small bear flag pattern, and it kind of closed right below it. Again, silver is in a long-term downtrend, and it really wouldn't surprise me if we had another humongous decline like we saw between September and October and May and June. So again, we're just going to have to watch silver very closely. There's not as much demand for the silver commodity right now, and for very, very many reasons. Gold also, another bear flag pattern right here, and it has broken down below it. And again, it's not really surprising. It floated up and it broke below it again. And the main thing here is that the main theme here is commodities aren't a very good investment in times of deflationary pressure. So that does it for me for today, guys. If you have any questions, leave a comment right below.